Synopsys, the chip design software maker, has announced that it will acquire Ansys, the maker of software that is used in creating products ranging from airplanes to tennis rackets, in a $35 billion cash and stock deal. This acquisition marks the largest in the technology sector since Broadcom acquired software maker VMware in November 2023 in a $69 billion deal. The deal is expected to trigger more significant acquisitions as a pickup in economic sentiment and failed antitrust regulator attempts embolden CEOs to place large bets on acquisition. The deal implies a per-share value of $390.19, representing a premium of about 29% over Ansys's last close on December 21, 2023. The transaction will create a massive new player in a sector of the business software industry that is already highly consolidated. Wells Fargo said in a note that the deal creates regulatory uncertainty. Synopsys produces tools for designing chips, complementing Ansys's software for evaluating larger electronic systems where the chips end up. The deal comes at a time when leading companies such as NVIDIA and Intel are designing complex chips made up of multiple pieces and computing systems housing the chips. Ansys's simulation software is used by engineers, designers, and researchers across industries like aerospace, defense, automotive, and energy to help analyze products. The company's products compete with Autodesk's Fusion 360, AutoCAD, and Dassault Systèmes SolidWorks. Synopsys is a mainstay of chip design companies like Advanced Micro Devices, Intel, and NVIDIA, and it has benefited from the trend of firms like Microsoft and Alphabet's Google taking some chip design efforts in-house. The deal will bring together Synopsys's semiconductor electronic design automation, EDA, tools with Ansys's simulation and analysis portfolio. The EDA industry is already highly consolidated between Synopsys and Cadence, both of which have similar market capitalizations. Ghazi and Ansys CEO Ajay Gopal told Reuters that the boards of both companies retained independent advisors to evaluate regulatory risks. The deal could trigger regulatory scrutiny, particularly in key markets like China, where approval times are more difficult to predict. If the deal is called off for specific reasons, including antitrust hurdles, Synopsys will have to pay a termination fee of $1.5 billion to Ansys. If Ansys ends the deal to accept another superior proposal, it will be required to pay the design software firm $950 million.